Welcome to all of you, Shiksha 360. And today, basically, we will start chapter number 8, part 1. Clear? This topic is very, very important, and we have to discuss in detail at least 3 to 4 sessions specific on this topic along with the examples. Clear? In the examination, basically, you will find 1 mark question, 0.5 mark question, or even 2 mark question basically from this chapter. Clear? So, very, very important for the examination point of view. And very easy topic, clear, and very easy topic. Directly, basically, I will tell you some of the straightforward question basically from this chapter. Clear. So let's start our discussion. Chapter number 8, maintenance of cash, subsidiary books and ledger, part 1. So let's start our discussion. So business transactions, clear, basically in every business, clear, business transactions involve the exchange of value. Business transaction basically involve the exchange of value either in the form of money or of goods or services. Clear? Business transaction basically involve the exchange of value either in the form of money or of goods or services measured in the terms of money. Bookkeeping or accounting is the systematic recording of the transactions. Clear? Bookkeeping or accounting. Clear? So either we can say that bookkeeping, we can say that it is the meaning of that basically we are coding all the transaction in a particular notebook. Clear? So bookkeeping or technical word, that is accounting, is the systematic recording of transactions with the view to ascertaining the financial position of the business. Clear? Basically with the view to ascertaining the financial position of the business. So according to this system, every business transaction basically has a twofold financial aspect. Clear? Twofold financial aspect. Clear? Like we can say that basically twofold financial aspect basically in the business transaction. Basically, what is the meaning of that? If there is one debit entry, clear, basically if at one place the amount is to be goes out, so at other place basically it comes in. Clear? If one place basically it is goes out, so other place at basically it is comes in. So that is basically means debit, credit. So basically what it means that the debit or credit. Clear? So basically what it means that the debit or credit. Clear? So basically this is the meaning that the financial transaction or a business transaction has a twofold financial aspect basically, which means that it affects two accounts. One account is to be debited. Clear? Basically one account is to be debited and the other account or the other credited with the like amount. Clear? Or basically other basically credited with the like amount. Clear? So this is the fundamental principle of double entry bookkeeping. Clear? So sometimes basically we can say that basically what is double entry bookkeeping? That is if one account is to be debited, so basically just we can say that basically other account is to be credited. Clear? Like in the upcoming slide, basically we will discuss regarding the personal accounts and some other different types of account. So at that point, clear, just for the answering the question, clear, not for the understanding the concept, just for answer the question. Basically, if you are able to find even that this entry is to be debit, so definitely other entry is to be to the credit entry. Clear? Other entry is to be the credit entry. Clear? You have no need to worry for think over that. Just you have to take that answer. Clear? Will guide you basically in the upcoming slides. Clear what I am telling here. Okay. So now further discuss next point. So what is bookkeeping? Bookkeeping has been defined as the art of recording business transaction. Clear? What is bookkeeping? Bookkeeping basically has been defined as the art of recording business transactions with the view to having a permanent record of them. Clear? Basically with the view to having a permanent record of them and of showing their effect on wealth. Clear? And of showing their effect on wealth. So basically it is a science. Clear? Like it is like a science. Basically that records pecuniary transactions. Clear? Basically it is a science basically that records pecuniary transactions. Clear? That is basically transactions either in the money or money boards in such a manner basically that a trader is able to ascertain. Clear? That is basically that person is able to understand. That is clear, transactions basically are to be performed in such a way. Clear? First one is the nature and the value of his assets, including the amount owned by him basically by the sundry debtors. Clear? Basically by the sundry debtors. Clear? The nature and the value of his assets, including the amount, clear, basically including the amount basically owned by him, basically by the sundry debtors, clear. Next one, basically the amount of his liabilities, clear, basically how much basically they have to pay, clear, basically how much they have to pay, clear. This is own wealth, clear, nature and value. Second one is basically all the things basically they are able to understand basically with the help of the transactions, clear. Second one is the amount of his liabilities, including the amount owned by him basically to his creditors, clear, the amount of his liabilities, including the amount owned by him basically to his creditors. Third one is whether he has made a profit or loss, clear, whether he has made a profit or loss, clear. In the end basically they are able to understand basically how much amount is credited and how much amount is debited, clear. So whether he has made a profit or loss basically during a given period, and how the amount basically that he has gained or lost, clear, basically is made up. And last one, that is whether he is solvent or insolvent, clear, like basically whether he is able to return or pay back the money or not, clear, that whether he is a solvent or insolvent, clear, and the amount of his capital or deficiency, clear, and the amount of his capital or deficiency, clear, whether he is solvent or insolvent, and the amount of his capital or deficiency, clear. So all the things basically we are able to understand with the transactions, clear, basically with the transactions. Okay, so now further, what is cash book, clear, cash book, clear. Why I am discussing these things, because sometimes basically 0.5 mark question basically you will get from these things, clear, and I will discuss especially all these types of question with you, clear, in the upcoming sessions, clear. No need to worry regarding it, just try to understand within 1 or 2 sessions, clear, you are able to understand all these things. So now let's start. What is cash book, clear? So cash book basically what, as the name suggests, that clear, the book that keeps record of all the transactions, clear, basically as the name suggests, basically the book that keeps record of all the transactions, basically that is known as the cash book. That is the cash receipts and cash payments, clear, basically it is called a cash book, clear. So it's a ruling is like a ledger account, and it is divided into two sides, clear, basically cash book basically it is divided into two sides. First one is a debit and second one is a credit, clear. So debit first, credit second. This is okay. And further, all receipts are recorded on the debit side, whereas all payments are basically recorded on the credit side, clear. All receipts basically generally are recorded on the debit side, and all payments are basically recorded on the credit side, clear. You are able to understand these things more basically when we will discuss examples, clear. Since it serves the function of the cash account, so there is no need for opening the cash account in the ledger. So cash book, basically what is cash book? It is a book of original entry basically on the ground, that all the transactions basically are first recorded in it, clear. So whatever be the transaction, first of all basically that is recorded into that, and thereafter basically recorded from cash book to the various ledger accounts, clear. So it is also called a ledger or book of final entry, since all cash receipts are basically entered on the debit side, where all cash payments basically are entered on the credit side, clear. Maintained under double entry principle, clear. That is basically we have already discussed, that is the double entry bookkeeping, clear, double entry bookkeeping, clear. So here 1.5 mark question basically which you have to remember, that all cash receipt, like that is basically we are getting the cash. It is on debit side, and like you will learn the debit the receiver, credit the giver, clear. These things basically you will learn in the upcoming slides, clear, basically when we will discuss the different types of account and the golden rules of the accounting, clear. We will discuss the thing that things basically will you will understand more at that time, clear. So just here, cash receipt, it is basically present on the debit side, and cash payment, it is present on the credit side, clear. So please remember these two things. Cash receipt basically it is present on the debit side, and cash payment basically it is present on the credit side. Clear? Hope you are able to remember these things. Now move to the next part. Record keeping basis. Clear? Definitely, basically, you will find this type of question in any of the sets. Clear? As this is basically 0.5 mark question. Clear? And what they are asking. Basically, what is included under the accounting cycle? Clear? Basically, what is to be included under the accounting cycle? Clear? So basically, these three things are basically included under the accounting cycle. First one is the recording. That basically we are writing all the transaction basically in a book. Second one is classifying. Clear? Basically, we have different ledgers or appropriate ledger account. Clear? Basically, we will put the transaction. Clear? Last one is the summarize. So first question, basically, how many things are basically included in the accounting cycle? So we can say that three. Or in which sequence? First one is the recording. Second one is the classification or classifying. Third one is the summarizing. Clear? Third one is the summarizing. Clear? So let's discuss one by one. First one is the recording. Clear? So in the first instance, all transactions basically should be recorded in the journal or the subsidiary books as and when they takes place. Clear? Recording basically it means that in the first instance, clear, all transactions basically should be recorded in the journal. Clear? All transactions basically should be recorded in the journal or the subsidiary books. Clear? Or the subsidiary books as and when they takes place. Clear? So in the first instance, basically all transactions should be recorded in the journal or the subsidiary book as and when basically they take place. Second thing here basically that is the classifying. Clear? That is the classifying. So basically all entries in the journal or the subsidiary books. Clear? All entries basically in the journal or the subsidiary books are posted to the appropriate ledger account. Clear? All entries in the journal or the subsidiary books basically are posted in the journal ledger account to find out a glance basically that the total effect of all such transactions basically in a particular account. Clear? That the total effect of all such transactions basically in a particular account. Clear? That is basically known as the classification. Clear? That is basically we have to classify the transactions. Clear? Third one is the summarizing. Clear? Third one is the summarizing. That is the last stage is to prepare the trial balance. Clear? And final accounts. Clear? The last stage basically is to prepare the trial balance and the final accounts with the view to ascertain the profit or loss. Clear? Basically, the last stage basically is to prepare the trial balance on final accounts with the view to ascertain the profit or loss. Clear? Basically, with the view to ascertain the profit or loss made during a particular period. Clear? Basically, with the view to ascertain or basically to understand basically how much there is the profit or loss basically made during a particular period and the financial position of the business on a particular date. Clear? And the financial position. Clear? And the financial position basically of the business. Clear? On a particular date. Clear? So all these things basically they are able to understand basically in the summarizing. Clear? Basically in the summarizing. Clear? So please remember all these things. Clear? What is the thing basically they are mentioning here? First one is the recording. Second one is the classifying. Third one is the summarizing. Clear? Third one is the summarizing. Clear? So basically these three things basically are to be included under the accounting cycle. Clear? Basically these three things basically are to be included under the accounting cycle. Now move to the next thing. So this is the like a ledger name. I will tell you. So the ledger basically what is the ledger? So the ledger basically it is the principal book of the accounts where similar transactions basically according to a particular person or property or revenue or expense are recorded. Clear? That is basically to a particular person or to a property or revenue or expense are recorded. Clear? In other words, basically it is a set of accounts. It contains all accounts of the business enterprise. Clear? Whether real, nominal or personal. Clear? So basically ledger basically will contain all different types of accounts, whether it is to be real or it is to be nominal or it is to be personal. So the ledger account, clear? So the ledger account basically it is generally divided into two sides. Clear? Or it is divided basically into two sides. The left hand side, clear? Basically the left hand side basically it is known as the debit side, while the right hand side basically it is known as the credit. Clear? It is known as the credit. It is known as the debit. So the abbreviation, clear? Basically the abbreviation for the debit is DR and abbreviation basically for the credit is CR. Clear? So the abbreviation basically DR and CR basically are placed at the top left and right hand corners respectively. Clear? At the top left and right hand corners respectively. Clear? So this one is the date here. This one is the particular. This one is the I will discuss clear in the next slide. amount, clear? And second one, basically, this is for the credit. Okay. This is a folio. I will tell you what is the meaning of that. Okay. So this is the representation and I will help you or I will guide you basically how to make this clear. If you are able to understand this thing, definitely you are able to answer all these types of questions. Clear? And it is important. Clear? Or basically it makes you very easier in the upcoming chapters. Clear? Basically to answer the question if you are able to understand that. Clear? If you are able to understand that. So now let's move to the next thing point. Clear? So record keeping. Clear? Basically what is included under the accounting cycle? Basically these three parts are included: recording, classifying, and summarizing. Clear? Recording, classifying, and summarizing. So now what is the relationship between the journal and the ledger? Clear? Journal and the ledger. Clear? Because in this slide also, clear, in this slide and next slide, clear, you will find 0.5 mark question. Clear? Both the journal and the ledger are important books. Clear? Basically both are the books used under double entry system of the bookkeeping. Clear? That is a debit credit. Clear? Debit credit. Clear? Used basically under double entry system of the bookkeeping. Clear? So the following are the points of comparison between the two. Clear? The following are the points of comparison between two. Clear? First one is the transactions are basically first recorded in the journal. Clear? First of all, basically the transactions are first recorded in the journal and then later on basically into the ledger. Clear? And then basically they are posted to the ledger. So thus journal is the book of first or original entry. Clear? Thus journal basically it is the book of first or original entry basically, while the ledger it is the book of the second entry. Clear? While the ledger basically it is the book of the second entry. Clear? So this is 0.5 mark question. Basically which of the following is the book of first or original entry? That is the journal, and ledger basically it is the book of the second entry. Clear? Third, next point. The journal it is a book for chronological record. Clear? Journal basically it is a book for chronological. Clear? As the transaction is going on. Clear? Like first transaction is going on 2nd of October, next one is on 5th of October. Clear? So basically you will write it in the book as the transaction is going on. Clear? As the date passes. Clear? You are writing on continuously. Clear? So the journal basically it is a book for chronological order, while the ledger basically it is a book for the analytical record. Clear? While the ledger, clear, while the ledger basically it is a book for the analytical record. Clear? Basically it is the book for the analytical record. And for maintaining the transaction basically in the journal. Clear? The process of recording the transaction basically it is termed as journalizing, while the process of recording transaction basically into the ledger. Clear? This is journal. And into the ledger basically this is known as posting. Clear? Basically this is known as posting. Clear? So the entries in that journal basically it is recorded in the chronological order, and recording of transaction basically into the journal basically it is known as journalizing. And in the case of the ledger basically it is to be known as, it is an analytical record, and it is to be known as posting. Clear? It is to be known as posting. So I think all of you are able to understand all these points. Clear? What is journal, what is ledger, and how the entries are recorded basically into the ledger and into the journal. Clear? And how basically they are to be represented. Clear? And how basically they are to be represented. Clear? Hope all the points you are able to understand. Clear? And you are able to further understand more points as we will discuss the questions along with that. Clear? So the term posting. Clear? What is the meaning of the term posting here? So the term posting basically means that transferring the debit and credit items. Clear? Basically from the journal to their respective accounts basically into the ledger. Clear? Basically to their respective accounts into the ledger. So at that time basically means that basically by posting the entries, there are some rules basically which we have to follow. First one is separate accounts should be opened in the ledger. Clear? Separate accounts basically should be opened in the ledger basically for what? For posting transactions. Clear? Basically separate account basically should be opened in the ledger for posting transactions relating to the different accounts recorded in the journal. Clear? Basically relating to the different accounts recorded in the journal. Separate accounts. Clear? First of all, basically separate accounts basically we have to open in the ledger for posting the transactions. Clear? Related to the different accounts recorded in the journal. Just try to listen these points. You are able to understand all these points basically when we will discuss after in the next session, that is different types of account and how to identify, clear, basically which is that account, clear. So it is customary to use the words, clear. Basically we will use two words. First one is the to, T double TO, and by, while posting in the ledger. So when basically word to is used, the word to is used with accounts shown on the debit side of the ledger account, clear. Basically to, basically when debit side of the ledger account, clear. While the word by is used with accounts which appears on the credit side, clear, which appears on the credit side. To debit side, by credit, clear. You have to remember that BC, that is by, is to be represented on the credit side, clear. It is to be represented on the credit side, clear. So please remember these things, clear. Basically to is to be represented on the debit side and by is to be represented on the credit side, clear. These are very, very important things, clear. Basically these are very, very, we can say that basically easy points, as it seems that basically, and at the time of the examination, just basically we have to remember all these points, clear, so that basically we are able to answer the question. Now move to the next one. So balancing. Now basically we have to balance the account, clear. Now basically we have to balance the account, that is balancing of an account basically means that process of equalizing the two sides of an account by putting the difference on the side where amount is shorter, clear. Basically by putting the difference on the side basically where the amount is shorter, clear. So balancing of an account basically it means the process of equalizing the two sides of an account by putting the difference on the side basically where the amount is shorter, clear. So where the debit side or when the debit side or where the debit side of an account exceeds the credit side, clear, that is debit side, it exceeds the credit side, then the difference, that is this is more, so basically we have to put some amount other side, clear. Then the difference basically it is put on the credit side, clear. On the other side, if the and the account is said to be have a debit balance, clear, and the account is said to be as a debit balance, clear, if it is more. So this balance is to be brought down on the debit side while opening the account, clear. Similarly, where the credit side on the exceeds the debit side, clear, that is credit is more than the debit side. So the difference is to be put on the debit side, clear. In that case, basically the difference is to be put on the debit side, basically for balancing the account, clear, on the debit side, and the account is said to be have a credit balance, clear. And in that case, basically when the credit side of an account basically it is more than the debit side, we can say that basically the account is said to be have a credit balance, clear, credit balance. So basically credit basically means that addition, debit, deletion. Okay. So the following steps are to be followed basically for balancing the account. First one is total amounts of debit and credits entries in the account. If the debit and credit sides are equal, then there is no balance. Clear, if the credit and debit sides are equal, then there is no balance. Or we can say that the account stands automatically balanced or closed. Clear, so or we can say that basically the account stands automatically balanced or closed. Clear, if the debit and credit sides are equal, then we can say that basically there is no balance and the account stands basically automatically balanced or closed. Clear. Or other one, if the debit side total is more, clear, on the other side we can say that if the debit side total is more, so then what we have to do, put the difference on the credit side amount column by writing the word that is by balance, clear, by balance, clear. Why we use the word by, by? Because we know that basically on the credit side basically we have to use the word by, BC. And if the credit side total is more, put the difference on the debit side column by writing the words to, clear. We know that basically on the debit side basically we have to write the word to, and on the credit side basically we have to write the word by, clear. So please remember these 2 points while answering the question, clear. So please remember these 2 points basically while answering the question, clear. So this is the journal discussion, clear. So this is the journal discussion of the journal and ledger and some other debit and credit, clear. So last point basically which we have to discuss. So what is the debit side, clear? So what is basically means that the debit balance, clear. So the debit balance of an account may represent either an asset or an expense, clear. Basically what it means that the debit side of an account, clear. Basically debit side of an account, basically what it means that basically either an asset or an expense, And similarly, credit balance, clear, basically credit balance of an account basically represent either a liability or a gain. Clear, basically similarly, the credit balance of an account represent basically either a liability or a gain, and the debit balance of an account basically represent either an asset or an expense. Clear, either an asset or an expense. What they are writing here basically I will left for this session, because first of all basically we have to discuss basically what are the different types of the account. Clear, personal, real, nominal. Clear, we have to discuss in detail all these accounts. Only after that basically we are able to understand these terms. Clear, basically we are able to understand what is written here. Clear. So in this session basically we have to discuss up to this much point. In the next session basically I will discuss with all of you basically what are the different types of the accounts along with examples. Clear, along with basically I will discuss 2 to 3 examples basically that is available in the book, and 1 or 2 basically more questions, so that you are able to understand all the points regarding that. Clear. So thanks to all of you for joining this session, and I request to all of you, please subscribe our YouTube channel and join our Telegram group. Clear, basically for the classes you can join our batches basically either for the PPB accounts or legal, or basically for all. Clear. So thanks to all of you for joining this session, and for any query, for any question, you can mail on our email ID or you can text in our Telegram group. So thanks to all of you for joining this session.